Hello investors, welcome to another one with Interest in Investing. This video I'm going to delve into funds that I'm invested in, funds that I'm looking at and my theory around these funds, why I think they will be a good investment. Again, this isn't financial advice. Do your own due diligence and research around these if you do choose to invest in them. It's just what I'm doing. So I'm going to start with the most widely known broad index, the S&P 500. So again, I've touched upon this in another video, but if you didn't see that, that contains the 500 biggest companies in America. So think of all your tech giants, Meta, Nvidia, all these Google, gargantuan companies, huge. What I like about the S&P 500 myself is that if there's a company that's the 500th and their market cap drops and 501's market cap's higher, it automatically balances it out. 501 moving to 500, so it sort of almost automatically just drops the dying technologies out. So older companies such as oil, some communication companies, again I'm not saying all, I'm saying some, will drop down and slide out of that top 500, and newer technologies currently based around AI, tech and all this stuff going forward, probably EVs as well, will automatically get pushed up into that. But again, if you want to know what companies are on it, if you do Google, there are different funds, so they may have the S&P 500, they're going to have the same companies because they're the top 500 companies, but there are other funds such as NASDAQ, that's tech stocks, primarily American, and different companies will have their own NASDAQ ETFs, but they might have different different stocks in there. They might change it around. So it's always best just, I go onto Google, put in the company, put in the index, and then put stock holdings, and it will give you a breakdown off the official website of every stock, what portfolio weight it is. They usually give you a year return as well, so what that stock within the fund has returned and what the fund has returned overall. So with the S&P 500, what I started with is I put £1,000 in. There is online, you can look at compound interest calculators to work out roughly how long it would take to get to a certain amount of money. So I based it off the last 100 years. If you average it out yearly, the S&P 500 on average, again, there's been better years, there's been worse years, has returned 10%. I went with a safe ballpark and put 7% as my predicted return, as historical data doesn't predict the future necessarily. So just to be on that safe side, and I put a seed fund of £1,000 in. You don't have to do that. I just wanted to start with some capital in there. So that's just buying £1,000 worth of ETFs on the S&P 500 with the fund I chose to go with. And from there, I've been investing £80 a month into that fund. I've been putting some other money into stocks separately, under separate and the same accounts. I've got a couple of different accounts. But at that 7% predicted return I've put in, which again is far lowballing what the historical average has been, over a 15-year period with the initial £1,000, then £80 a month, every month for 15 years. With the compounded interest rate, that will return over £100,000. So that is just something that I'm doing separate from my stocks. I do also invest in some forms of crypto. That is a small allocation compared to the stocks and ETFs, as cryptos, we know, is it's up and down, can be all over the show. You hear about people making a lot of money, you hear about scams. I always use regulated brokers, so Coinbase, companies like this. There's other ones out there in the market that are regulated, and the Genius Act has recently been passed by Trump, so that's going to give more authenticity to these companies. I'm not going to go too far into the political side of it. Another fund that I've started investing in is the Invesco Defence ETF. So as it sounds in the name, it's all around defence companies. So companies to keep the UK, US, all over European and wider companies safe. With what's currently going on at the moment, there's a lot of international tensions. So I just feel it's a good place to allocate funds at the moment. Giving a breakdown of that, the Invesco Defence ETF is up 30% in the year. Not particularly amazing, but better than what you get in a bank account. So I feel that's only really going to grow. And then if I dig down a bit deeper, some of the stocks that are held in that fund, because again, a fund is made up of individual stocks. One's the Rocket Lab USA. That's had an absolutely insane return rate of 825% itself, just for that one stock. So it's really pulling that index up. A couple of others, I'm not going to deep dive too much into these again. I've not done that much research on all the stocks. I've done on some of the bigger holdings. I've done a bit of research. Kratos Defence and Security Solutions, Viasat, them two are up 183% and 8% for Viasat. But again, for the overall index, that's what we're focused on, and that is up 30% in the year. Another one is Van Eck, Crypto and Blockchain Innovators. This is a cumulative fund as well, because there will be different ones. There'll be a cumulative, non-accumulative. That one has returned 51% in the year. If we dig a little bit deeper and look at the stocks and the size of these that are in there, if you will. So that one is Coinbase, the largest holding, 9%, 9.10 to be specific. Coinbase I hold individually, though that's been on quite a bit of a tear this year. That's up 55.6% just for that. Block, it's another payments company, a bit like PayPal. They're in the similar space, not exactly the same business model. That's up 26%. MicroStrategy, I know this company very well. They've renamed recently to just Strategy. Ran and owned by somebody called Michael Sayer. He really believes in Bitcoin for the long term, so he invests a lot of money into Bitcoin through the company, and the company actually owns the most amount of Bitcoin in the world. And then rounding it off with Iron, I don't know too much about these, but they've returned 90%, so again, not too bad. And Coinbase, the biggest holding at 9%, Block 7.3, Circle 7.15, MicroStrategy, also known as Strategy, 6.8, and Iron rounding it out at 6.10. There are some smaller ones, but sometimes it just gives you a breakdown of the bigger holdings. So the other holdings will just be smaller cap companies that make up smaller percentages of the overall portfolio. So that's the Van Eck Crypto and Blockchain Innovators. And that one is up 51% for the year. So again, not too shabby. It will definitely beat a bank account in terms of what it's returning. So with the funds, in my eyes, they're a lot safer, because obviously you've got that breakdown, because it's not all just focused into one company. I do invest in stocks as well, but I do like to have a lot in funds, because it diversifies it for you. So I think I'll end that one here, but I will be doing more. If there are other funds that you're interested in or want to know more about particular areas and areas of the economy that funds may be in, please do comment down below. At the end of each of these, I said I'm going to give a little football prediction, as I am a football lover. So my prediction for this video is going to be, I think Chelsea. I've said at my Arsenal prediction in a previous video, I think Chelsea are going to have a season to remember and finish at least second. Don't quite think that they're yet to go first. They've made a lot of signings, and you need that gelling period, as we saw in 2003, 2004, when Abramovich took over and brought in a lot of players at once. But again, thank you. And if you have found this interesting or I took some value out of the video, do consider subscribing, putting a thumbs up on it, and maybe commenting down below thoughts. You've been watching Interesting Investing. Until the next one, peace.